Good afternoon, everyone. Thank you for joining this Dutch-Romanian Chamber of Commerce event. Thank you definitely to our speakers today, Costantine and Michael joining us from Frankfurt, and Martin here with us. We all are hearing these days about cryptocurrencies. Big investors buying cryptocurrencies, selling cryptocurrencies, talking about cryptocurrencies, and therefore the price of the cryptocurrencies are dropping. Banks preparing themselves for these cryptocurrencies. But Costantine, let me start with you. What is a cryptocurrency? So what does it look like? Can I hold it in my hand? How long has been cryptocurrencies around us? So what is a cryptocurrency?
Thank you, Javier. Hello, everyone. And before I dive into the answers, I want to congratulate everyone who is taking place, who choose to spend the time today with us. That's because we are actually witnessing a revolution, one which is happening, I don't know, maybe once in 100 years, like the internet revolution. We are still at early stage of it, and I think the lessons or the information we'll get today will give you an advantage because this will continue to impact our lives. So congratulations everyone for being today with us. Okay, so cryptocurrency, it's a currency which is online. You can hold it on your hand if you hold a phone which actually has cryptocurrency. And it's hard money. Or if I would say Bitcoin, actually, it's hard money. Are the best, I would say, okay, so technically speaking, it's a currency which is based on cryptography. And this is from where the name comes, cryptocurrency.
Okay, and so the cryptocurrency is a currency, is hard currency.
Yes.
But within cryptocurrencies, you also have several types of cryptocurrencies. You have centralized currencies and decentralized currency. Exactly. What means that, and what is the difference between them, Costantine?
Yeah, it's a big difference. The most well-known cryptocurrency is Bitcoin. It's decentralized because this one, it lives by itself. It doesn't depend on one entity. It lives on the internet, and there are millions of computers which are part of, so it's based on the strongest network of computers on the earth. Mm-hmm. So it's like a strong online fortress. And there is not one single point of failure, so it's not like a central server which keeps all this network. It's distributed in thousands or hundreds of thousands of computers.
So basically, when you are saying that it's distributed, each one has their own currencies?
It's only one currency, but the record of a currency with transactions. And all of these transactions are recorded in a ledger, like in accounting.
Okay.
So the Bitcoin is moving from me to another person. There is a transaction. All of these records are distributed. So copies of this database is distributed through many computers all around the world, and countries. So it's one currency distributed with no single point of failure.
But then the centralized currencies, where are they?
The centralized currencies, it's the fiat currencies. They are centralized.
Okay. So basically, they have the backup, or they are supported by state, by a bank, or by somebody else, or they have regulations.
Yeah, they have all of that, what you said, but I think the difference here is that there is mostly one entity which decides. Let's say the national bank, or the national bank for the currencies. So that's one thing. Second, another main difference between Bitcoin and the fiat currencies is the fiat, they have an inflationary factor, which is big. So they print new currencies. So let's say euro or dollars. The way the economy works, they print a lot. This is actually they inflate the monetary number. So let's say you have trillions, then you have many more trillions. They're adding 3 more trillions.
And you cannot print or you cannot issue new bitcoins?
No.
So there is a limited number?
Yes. It's a mathematical programmed limit of 21 million Bitcoin. So, and that actually makes it limited, so scarce and limit, with a physical limit, and that actually more demand and more value will add due to this physical limit.
Correct. We are trying to, especially for those of us that we are not so familiar with cryptocurrencies, we are starting with the base so that we understand basically what are we talking about. In many cases, we might, yes, everybody's talking about cryptocurrencies, but we are not that familiar with cryptocurrencies. Blockchain and cryptocurrencies. Is it one dependent to the other? Is it one the consequence of the other? Are they related, Martin?
They're definitely related. Okay. I actually am not sure whether there's always a relationship, but I think that the fundamentals of the blockchain is, I think, something that people need to understand in order to understand the potential of something like Bitcoin or any kind of cryptocurrency. Because it's about this distributed ledger, like Custodian mentioned, where you have always, let's say, one, representation of the real world in a digital form. No one can basically do that. So it's very, let's say, I would say, anti-fraud. So it's very difficult to hack. I don't think there have been any kind of cases. But the blockchain in itself is basically a representation of a much bigger development that we see. We see that because it's not the only way. We will probably also be talking about unbanking. That phenomenon that you basically are looking for alternatives using digital technology for something that is basically stuck in our traditional economy. That's basically why I think Bitcoin, Ethereum, and other cryptocurrency and blockchain is picking up so quickly. It is a very good alternative. I like very much the example in Africa. You have M-Pesa. M-Pesa is basically a payment solution based on phone credits. It's a similar kind of concept. We are looking for alternatives where we don't need actually a bank, which normally can be very difficult in actually accessing me to a bank account with all the details around that to actually be part of the actual economy. So I think there's a much wider development going on that we have to bear in mind if we look, at least, let's say, forward. If we understand that, then we can actually really value Bitcoin, cryptocurrencies, and the blockchain as a solution to, I would say, not necessarily problems, but at least new areas of value.
Correct. And why is then Bitcoin and all these cryptocurrencies so much in trend today? What has happened today that was not here yesterday? And who is the front runner? Is it private person or it's corporations or legal entities?
Okay, so let's see actually how this started. So it was like the Pandora box. Bitcoin was the first blockchain project, and it came right after the crisis in 2008. That was a big financial, global crisis, mostly because of the financial system, because of the banks, and with very bad consequences for all the people, or most of the people, especially for people who didn't have anything to do with the banks. This one came as an alternative for the current financial system, where, let's say, not everyone has to pay for the mistakes of a few. So that this alternative system of Bitcoin, it's an asset value where you can put your savings for the long run. So, for example, if you want to save some money, or you want to that savings to keep the purchase power, there were not too many alternatives, or they are, but they are not in time with our times, so not in synchron with our times. Let's say we had gold, we have real estate, jewelry, but we live today in a digital world. And so the Bitcoin was first like the email of money, to send money everywhere, peer-to-peer. But Bitcoin was only the first one when opening is actually one of the main ones, but it opened it with the technology behind, which is the blockchain, many opportunities, many venues to develop, to change the current industries.
But Konstantin,
yes.
sorry to interrupt,
Yeah.
because you said that cryptocurrencies were born as a consequence of, in a way or in a moment, the failure of the banking system or the mistakes of the banking system. Should we then unbank? Should we move out from the banks?
No, I will say actually there is another phenomenon, which is, the phenomenon of unbank yourself means instead of keeping your cash, which right now actually lose real purchasing power like 10-50%, and with zero interest in the banks. This is what is paying today, is the lowest ever in UK. In 325 years of banking, is the lowest today with 0.2, I think, is the interest. There are another alternative, which is Bitcoin, which actually is growing value. So especially for this of keeping long-term investments, Bitcoin is the alternative. But I'll go back to the fact that when Bitcoin came, I don't know if it's a coincidence, it just came right after the crisis, and was on a public crypto forums, and the founders, we don't know who are the founders. The inventor, the name is Satoshi Nakamoto, can be one person or a group. It made this amazing project, and a voluntary project, and it just become a global phenomenon. But what impacted this growth was actually similar events like the 2008. And I mean here, the 2013 crisis in Cyprus, where people lost half of their money if they had more than 100,000 in the bank. So they lost half of the money, and they received useless shares in the bank because the government took that money. And at that moment was another moment when Bitcoin exploded. So is your better alternative?
And I think also now, recently I read that the amount of savings that people have due to the COVID-19 crisis is just tremendous. So the amount of money not spent in the regular economy, I think also ramped up. And of course we had some, not incident, but actually some examples where Elon Musk invested heavily, and as of course is a very big showcase. But I think that there's also a surplus of money in the economy that finds now a way into something that is apparently, let's say, becoming interesting. I would though, but let's say there's also save that for the latter of the conversation, move beyond the investment part of Bitcoin. I think Bitcoin has a much bigger purpose to serve than just as something where you invest and get quick money. Because the majority of the sentiment right now in the economy is that if you invest in Bitcoin, you can become rich very fast. That might be true, but there's, I think, another element which is even more important, that if we do it well, it actually helps people and also economies to thrive in the digital age. So let's not too much focus on if you have money to spare, just invest and you are becoming rich quickly. I think there's much more to that.
Actually, you can lose.
But I think the mindset of this is an investment opportunity only, and of course we're talking about investment opportunities, but I think there's a little bit more to it.
Correct. And eventually, do you think this cryptocurrency, this Bitcoin, will unseat fiat currencies?
No.
So they are here to live together. It's not one or the other. Both of them should. Do you believe will continue?
Yes, they will continue.
They have to.
Maybe other cryptocurrency will replace some of the world fiats, not so successful. But about Bitcoin, I want to make one thing clear. It's because I'm in the market since 2014 and I do this full time. And I sold many Bitcoins, which I regret badly.
Yes.
And I think...
Not to me. I would have loved that.
Yes, yes. But I think the one who bought it, they also sold further. The real winners in Bitcoin were the one who kept them at least 3 years. Bitcoin is a long-term game.
Yeah, we will actually talk a bit later in actually a product that Bitcoin Romania is offering.
Yes.
For a 3 years investment, right, Custodian?
Yes, but here what I want to say, there is it's not good for payments. And I will tell you why. There is a guy who bought in 2010 2 pizza with 10,000 Bitcoins. They are worth right now close to 500 million.
That is a pizza.
Yeah, that is it.
That is a pizza.
So he proved that actually you can pay. But actually Bitcoin is not for payment because the moment
more for investment.
It's for hodling and investments.
Correct.
Yeah, to keep them.
Okay, then we have those Bitcoins. We have them. And how we save it? Because actually it's not, you cannot touch it. You cannot hold them. So where do you save? Where do you keep them? Where do you?
Yeah, yes.
Please, please.
So there are. It's a software. It's a digital. It's based on and they're based on the internet and based on a software solution behind. And there are wallets where you can keep them. There are different kind of wallets. For example, if you have $50, you can keep them in your pocket. If you have 10,000 euro, you look for a safer wallet. The same is with Bitcoin. We have wallets which are totally disconnected from the internet, are called paper wallets, and they are mostly the safest one. But for all of this, you have to do your homework. You should learn exactly the advantages and disadvantages, because if you keep it on a paper wallet and you travel, maybe you don't have it with you. And if you need a Bitcoin...
All of these wallets, paper wallet or in computer or in the cloud, are they safe?
Yes.
Can they be hacked? Can we lose our investment in Bitcoins? Because if I lose my $500 from my pocket, it's not that I like it, but okay. But if I lose 3, 4, or 5 Bitcoins,
yes, it will be painful, and in time will become even more. This is actually an important topic. You really, if you want to hold the Bitcoin yourself, you really have to do your homework and learn how to do that safely. Right now, there are custodians which offer this service, professionals custodian. So if you want flexibility and you don't have the time and you don't want to you want the professional to keep your Bitcoins, you have this option right now. So there are options. You can keep it yourself, but please do your homework.
Correct. As we know, there is the bank deposit guarantee that is actually guaranteeing up to 100,000 euros fiat currency when you have your bank account, in case there is an insolvency or there is a problem with the bank in which you are holding that fiat currency, that money. In case one of these wallets, in case one of these holders fail, enters in insolvency, who is guaranteeing that money that you have deposited with them, that you have given them the mandate to safeguard your Bitcoin? Who is responding for that?
Nobody.
Well, that's
yes,
an important thing to take into account, no?
Yes, but it's actually also a big difference, because as I said, if you really want to be 100% sure that there is no risk, you do your homework, you learn how to keep them safe, and you keep them, and there is no risk, instead if you make a mistake, to lose them. Also, when you work with a good custodian, he has tools which gives you access, where you also actually you have 100% access to your coins. So basically, it forces you to do the right way. the custodian of the. So they don't really, they keep it, you keep it, but using their tools, which helps you to create a safe wallet for yourself.
But if I lost those keys, I lose everything.
You lose everything, yes.
I cannot go to the bank and say, can you please remind me my bank account? No, it doesn't work like that. Nobody will remind you your... Okay, so you really need to be careful.
Yes, security is very important in cryptos.
We are going to talk now about a bit of taxes, because it's not that we have forgotten Michael there in Frankfurt. Is not present with us here, but Michael, we haven't forgotten about you. We are going to talk about taxes now. You will help us, hopefully, to clarify, to bring some light in all of that. But just before finishing and moving to this, you mentioned about investment, 3 years. Bitcoin Romania has a program for that?
Yes, yeah.
That is actually securing the investment.
Yeah, so in our experience, we notice the best way for most of the people is to buy Bitcoins and hold them for a long term. But we also notice these particularities, like it's not so easy for everyone to take the security as serious as it should be. Mm-hmm. So we made a product where it's exactly for this purpose. Invest in Bitcoin for long term with no risk and easy to use. Don't have to keep like hard passwords or different methods of security. But just buy Bitcoins and know they are there, security stored, well stored, mm-hmm. and just let them work for you. So we made this program, which is we invite our guests to contact us if they are interested, and I hope they are. Which is not on our website. It's actually face to face. We have to speak with everyone and to explain to them exactly how this function and to see actually the differences. It has a particularity that actually what we invest is guaranteed, but with the condition to understand how Bitcoin function and to have the patience for the long term. Because we want, if the customer make money, we will make money. If they don't make, we will not make money. So we want them to make, to be winners. In the
so to better understand, they have to contact Bitcoin Romania.
Yes.
And you will...
Yes, to schedule a meeting. We have an office in Bucharest to come to our office. And so this one is for corporations and private citizens.
Okay.
It has a minimum of 5,000 euro to invest.
Yes. And how long do you have to leave it there?
3 years.
3 years. You cannot touch it in 3 years?
No, you can. You
can?
You can. But to benefit of the entire options, including the guarantee,
okay,
you should keep it for 3 years. Because also 3 years is the time where you actually make a lot of money in Bitcoin. Actually, you can make a lot of money in Bitcoin, but this proved to be like a 3 years period.
Good. So let's move a little bit to the taxes, how a cryptocurrency is being taxed. In the US Internal Revenue Service, they define cryptocurrencies as a property rather than as a currency itself. So basically, you have to report your assets in cryptocurrencies as properties rather than as money. How is it working in Europe? Do I need to report holding these cryptocurrencies on my taxes every year that I do my taxes? Shall I pay taxes on those cryptocurrencies while I'm holding them? How much taxes are being, is a property, is a currency? Who can bring us some light in terms of maybe how to tax, or how are cryptocurrencies being taxed here in Europe?
Maybe Michael?
Michael.
I would say Michael.
Well, I mean, the first thing we should probably say is that there's nothing more certain in life than death and taxes. So absolutely, you are, regardless of which tax regime you are subject to, you are required to declare capital gains and you're required to declare income. The situation with respect to tax, and I'll pick up on some of the points that Konstantin was mentioning beforehand. But what I think people who are interested in cryptocurrencies or digital assets more generally need to be aware of is that currently we have, certainly in the European Union, we have 27 different tax regimes. We also have 27 different regulatory regimes that apply to cryptocurrencies and digital assets more broadly. That is set to change, at least in terms of the financial regulatory regime, and that is set to change by 2024, when the European Union will be putting in place a new form of regulation called the Markets in Crypto Assets Regulation, or MiCA for short. And what will happen in the European Union is that with the passing of MiCA, we will have the world's largest single market for crypto assets. That legislation will define how crypto assets that are treated like financial instruments, so like shares, like bonds, how they will be regulated, and then the whole wider world of non-financial instrument crypto assets, how they will be regulated. And that provides a lot of certainty. Unfortunately for tax, we're not quite there yet in terms of having a common understanding and treatment of how cryptocurrencies and crypto assets should be taxed and when. And that's problematic. Part of that is due to the fact that the European Union at the EU level does not have exclusive competency to pass regulations on what a tax rate should be. It can make suggestions, as it's done, of course, with value-added tax, but tax remains a national competence. So we're hoping from sort of the financial regulatory policymakers, we're hoping that at least with MiCA from 2024, we'll have greater certainty in how crypto assets are regulated, and more importantly, how those that are providing services and products related to crypto assets, how they need to conduct themselves. We're also hoping that as part of the changes that are being contemplated potentially with the Depositor Guarantee Scheme Directive, so the €100,000 per eligible deposit definition, that crypto assets may have some form of protection. It probably won't be as an eligible deposit, because cryptocurrency itself does not fall within that term, but it could very well be part of some of the other reforms that are underway in relation to accounts that are held with brokers, so under the Investment Compensation Schemes Directive. But again, that's on the horizon. The problem as well that you have with cryptocurrencies, just returning to the tax point for a moment, is that they're extremely volatile. They are not suitable investments for retail customers. They are only then suitable for retail customers when they have fully understood the risks involved. The fact that there is a limited market with high volatility. At times there can be limited liquidity, and coming to the point of the sort of threats and risks that are involved with holding crypto assets, whilst there are those providers, and they're not, legally speaking, they're not custodians, they're custodian wallet providers, so they're not the similar setup as a custodian would be if it were a bank, but they are a different type of regulated category called custodian wallet providers. Those custodian wallet providers are, as Konstantin has said, bringing out products and services to make the holding of crypto assets easier for retail customers as well as institutional customers. Larger banks who are already custodians are moving into that space as well. So you have, over the past 2 weeks, you've had Goldman Sachs announce a trading division in crypto custody. You have Citibank launching an offering in crypto custody. You have in Germany a number of the large German banks that are looking into that. They're moving in. Below that radar, you have a number of very highly experienced professional firms, equally competitors to Bitcoin Romania, who are, of course, active in this area, but they are not regulated like banks, and that's one thing which is quite important. So, as Konstantin has said, you need to do your homework. However, the larger players moving into this field, where there are already a number of solutions in tracking what a tax return needs to look like to keep the tax authority happy, will hopefully close some of the divide in terms of, am I actually correctly reporting transactions for the purposes of taxation? Tax authorities are very aware that persons who are actively trading in crypto assets may not be 100% understanding of what actually needs to be reported, or more importantly, what needs to be taxed. So we are at an inflection point and in a natural development of the crypto asset ecosystem really moving forward in terms of how sophisticated it's become. And going to the point that Martin was mentioning beforehand, it's crypto assets are here to stay. The solutions that are offered by the blockchain more generally are exceptionally rewarding for the financial ecosystem as a whole. Notably because through the blockchain, you can tokenize assets that historically have not been able to trade as freely as you would have stocks and shares or bonds. So if you look at, for example, a number of service providers that go in and say, okay, I will tokenize physical commodities, wheat, grain. I will create a token that may have some cryptocurrency attributes, but effectively is a token that represents value. Once that's put in place, the opportunities are almost limitless in terms of how you can create a market for that. And of course, a tax authority, and I should raise my hand, I am not a tax lawyer, I'm very respectful of tax authorities. A tax authority may also look at that and say, okay, that might also be interesting to tax. So we're really at this revolution, as my other panelists have said, where it's a very exciting time to get involved in cryptocurrencies, either as an investor or perhaps more importantly, notably with specifically looking at Romania, a number of the opportunities that exist that are specific to Romania, where distributed ledger technology and blockchain solutions could be a game changer. So I'll pause there.
Please. As I said, I'm working on a strategic think tank rather than, let's say, a financial institution. What is the difference, Michael, between investing in any kind of stock or in Bitcoin from a tax perspective then? Because if you just see it as an investment opportunity, or not just, if it's an investment opportunity, if I invest in regular stocks, so how does the tax authority look differently at digital assets versus the, let's say, the more traditional stocks there?
Well, again, I mean, that's a consideration that's specific to each tax regime of each country.
Okay.
All I can say from my own experience of dealing with my own tax returns in multiple countries, which is complicated as it is that you have to at the end of it look, do I have income that is taxable? Do I have capital gains that are taxable? So when I sell, if I bought a virtual currency at one price, and I've then realized a capital gain, that would be taxable, right? The tax regimes as they apply to traditional financial instruments, and indeed the legal framework for traditional financial instruments, are all based on property law concepts that have been around since the 19th century, that have been tackled by what we consider to be the modern financial markets in Europe that we live in and trade in, that have been finalized during the most of the 20th century and are now being upgraded to meet the new realities of digitization and digitalization, and in that sense also blockchainification, as awful as that word sounds, but that's the reality we live in, right? That tax and concepts of property law are effectively extending to catch up with the reality of the market. So every 5 years in Europe, as many of you will know, we have a philosophical debate of should we have a financial transaction tax on an EU-wide level, right? It's also known as the Robin Hood tax. There are good arguments for that. There are more arguments against that. At some point, we are probably going to have the European Union say, okay, we'll put out principles on what a tax system should look like for cryptocurrencies. And indeed, some of the international regulatory cooperation forums, so from the Financial Stability Board to IOSCO to the OECD, have all been looking at this. Because at the end of the day, if you leave, as has historically now been during the last 5 years, where crypto assets and certainly cryptocurrencies have come out of the cold, previously shunned by their connections to the darknet. And I would go back to what Konstantin was saying, why they have become a trend. It's not just because 2008 savers who were haircutted in certain Mediterranean jurisdictions and were not buying property in Northern European jurisdictions decided to move fiat currency, so euro, whatever, into Bitcoin. It's also specifically that a number of what we traditionally call the dark net, right? That's where cryptocurrencies are the currency to use because of the anonymity of the ability to transact using something which is difficult to trace by a government authority. And with that came, of course, the perception that cryptocurrencies are immediately a vehicle for financial crime and money laundering. And of course, some of that is true. Some of that is absolutely true. But mainstream adoption of cryptocurrencies since then, and certainly in the last 5 years, where institutional investors have moved into cryptocurrency, sophisticated private retail clients, effectively, but high net worth individuals, those that can stomach losses, effectively, those persons having moved into cryptocurrency means that regulators, tax authorities, also financial crime prevention stakeholders need to play catch up with a very different ecosystem. The tax principles, capital gains, income, etc., can all be adapted. It just needs to have a harmonized approach across the European Union. Otherwise, you don't have a single market for it.
But Michael, you said before, by 2024, European Union will put together a set of regulations in regards to cryptocurrencies. I do understand that governments, they have to track from where this money is coming and where is it going to avoiding money laundering and crime and all of that. But isn't it losing a bit of the essence, cryptocurrencies, when you put all the regulations like we have today in our fiat currencies? So basically, is it coming back to what we have today, but instead of being in paper, being digital? And isn't it losing a bit of the essence?
Well, yes and no. I mean, I think you're very right. There is a move by governments, but more importantly by central banks, to propose central bank digital currencies, so CBDCs. So the ECB has put out a number of consultations on what a digital euro would look like. And depending on where you are in Europe, there are certain jurisdictions which are quite favorable for that. If you're in Germany, where data protection, given the history of this country, is a very sensitive topic, the idea that you effectively don't need to have a local bank and have a degree of anonymity, but you have a bank account directly at the central bank of the euro area, where you have the full backing of central bank money, is only attractive if you can still guarantee some sort of anonymity, right? Do I really need to know that does the ECB really need to know how much I spend on food? Probably yes, because they look at it as a track of inflation, right? And the central bank digital euro would help that. Do they need to know how much I spend at a bar, or what I spend at a bar? Probably yes, for inflation. But do they need to know that I maybe ordered, three 𝗥𝗢𝗡𝗦𝗧𝗔𝗥𝗡𝗦𝗧 on my trip to Bucharest? Probably not. Yeah? I mean, I would not feel comfortable with that. So the fine line between data protection and a central bank digital currency and all that that could bring is a very, very hot debate at the moment in a number of jurisdictions. At its core, a central bank digital currency, however, is exceptionally powerful because it can allow monetary policy transmission directly into the account of my account, Javier, your account, Martin, your account, Konstantin, your account in the euro area, or even wider than the euro area, right? So in the absence, and then of course, sorry, just one last thing. The other thing, of course, is that if the central bank doesn't act, then we have other providers that might step in. So we have those that offer something called a stable coin, which is effectively a digital, virtual currency or a token that is linked to a fiat currency. And that also immediately takes the power of central banks, who are of course independent of the government, but respective governments, but of central banks to dictate monetary policy. Facebook's former currency known as Libra, now rehabilitated as Diem, posed a risk that Europe is now catching up with. Efforts in other jurisdictions, such as the PRC, so the People's Republic of China, with the 𝗖𝗢𝗡𝗦𝗧𝗔𝗥𝗡, which already has 100 to 150,000 test case users in a pilot regime, is also causing this discussion about whether to move. And if people are interested, there's a very good special feature in The Economist on CBDCs, or otherwise known as gov coins, that's emerging. Otherwise, Dentons and my team in particular, we're publishing a lot on it. So there's a lot happening, which is redefining how we'll do transactions and how effectively we will be paying in the future in the next 5 years, but certainly in the next 10 to 15.
Well, but then if all these central banks will start creating their own currencies, their own digital currency, China or European Central Bank is also discussing, and they were saying that by the middle of the decade, this decade, they might even launch one. What is going to happen with the so-called cryptocurrencies that we know? Because those will be more digital currencies, or we can call it a digital euro, a digital dollar, or a digital renminbi in China. But what happened with these thousands of cryptocurrencies that are...
As I said, there was a Pandora box. That means a lot of, they have impact in many areas. Payments, money transfer, real estate, agriculture. So many of these coins or tokens, they have different roles. They are not really money or like a currency. Bitcoin is special. Why? Because it's unique and has one main role, which is, I think also, before I say the role, I will say we should actually go back to the current financial institutions. They have only one solution for all the problem, which is printing more money. Actually, if you look on the internet, there is a popular meme, which is for 2 years already, where Bernanke, I think is the chair of Federal Reserve, he's just rolling, printing money, a lot of money. And this money actually trillions. I mean, back in 2008, where they shocked when they proposed was 800 billions. And now they 3 trillions, another 2 trillions.
Yeah, they talk about millions and trillions. And
yeah, but actually they inject this money in the market.
In the economy, yes.
In the economy. So what's happening is the richer get richer and the poorer get poorer. What that means, the real inflation, you don't look at the, at bread or the stuff you see it on the market. You should see it on the real assets, the hard assets, like real estate, stock market. Most of this money which they print and they say they want to help the economy to get on its feet is actually going through the banks in this direction, like the stock market, real estate. And who owns this? Most of the people, they are not there. Most of the people just wants to make, get the salary and pay the bills. So it's going in the stock market where the rich people are. So this is why, and their stocks is continue to go higher, inflated. The properties are going higher and become richer. And the people from the bottom, which is the majority, actually they get poorer because the money they get monthly, which didn't actually increase, they didn't receive any money from the Federal Reserve, except now they get some paychecks. That money is losing real value. So, for example, a house cost 50,000 15 years ago, now it's 3 times more. So that's actually the real problem here. How can you actually work for some things which you can save it and grow in value in time, real value? And here is the Bitcoin actually, and it's unique.
Yeah, but I mean, I wouldn't fully agree with that. And as a U.S. citizen, I certainly wouldn't agree with that. You have income disparity in a number of countries. The United States is no different. Income disparity has worsened. It hasn't worsened necessarily due to the actions of the Federal Reserve, just in as much as income disparity hasn't worsened due to the actions of the European Central Bank in its also unprecedented monetary policy operations. The problem that you have is retail market or retail investor market participation, be it in Bitcoin or be it in traditional financial securities. Okay, so if I were to go and I were to give helicopter money effectively to those that are below a certain income threshold, and I were to say, similar to what's been done in the United States, here's a pandemic check, okay, where I were to go to a business and say, based on 80% of, or based on your earnings of last year, here's 80% of earnings of last year as special support. That money is not necessarily going to flow into assets that generate an investment return. Okay, that money is fully, be it central bank money or be it through other special means, that money is not necessarily going to flow into assets that generate a return. It goes into expenditure where possible, or it goes into savings, or it goes into rebuilding businesses. That's currently the situation that we live in during the pandemic. If the European Union were able to act in a manner that it says, let us go in and let's put money in the pockets of those who actually need it and ensure that instead of them spending it on consumer goods that generate a short-term economic uplift, but actually goes into the stock market or goes into crypto assets, or better yet, goes into a central bank digital currency that invests in turn into various different projects that may be linked to the European Union Green Deal or maybe linked to infrastructure development, that is a game changer. However, you need national member states to actually support that. And at the moment, national member states are not doing that. If you were to give there was talk during the crisis of helicopter money. There was talk of giving every taxpayer in a number of European member states a certain value, and that value would be for free spending. And that idea is then to restart inflation. And that is effectively one of the goals of monetary policy, is inflation. It's not about investment returns for taxpayers. It's about inflation, a healthy economy, and price stability. But if you were to instead say the European Union goes in, and I'm just taking Europe as an example, and gives anyone who is below the poverty line money, but that money cannot be spent in the real economy, but has to be locked up as part of that person's pension, or has to be locked up as part of an investment savings account, great. But you need national member states to step in and do that. That's unfortunately the reality we live in. And if member states do want to change that, then I think the European Union would be more than happy to probably receive some of those proposals. But I mean, in the United States, income disparity has grown. It's not just because of, or it's not solely attributable to the actions of the Federal Reserve, but a culmination of a lack of equality and opportunity in education, in job growth, in certain industries, frankly, being phased out. Automation, robotics, outsourcing of industries to cheaper countries. This is the biggest transformation that the United States has seen, and certainly in Europe we're seeing similar things. And we're ahead of the next wave of transformation back following nearshoring and a new industrial policy strategy across Europe.
Let's come back, if you allow me, gentlemen, to come back to Romania and let's talk about which kind of opportunities these cryptocurrencies can bring to Romania as a country, not only as personal or private investor, that we have learned that you can actually make some money if you leave the coins there for a period of time as an investment, but as a country, how do you see cryptocurrencies opportunities for a country as Romania? Is there any opportunities there for us?
Yes, definitely.
You go first.
Yes. So I will outline in my, for example, with my company. Actually, Bitcoin went through a few stages. It's very important. Actually, it's a game changer. And the first were a few, let's say, libertarian back in 2008, 2009. And then, let's say, Silicon Valley, people from early investors got into Bitcoin. And starting with last year, 2020, when also the crisis started and the money printing, corporations jump into, so basically change their dollars for Bitcoin, put the Bitcoin in their treasury, company treasury. But not any corporation, actually public big corporation, like MicroStrategy is one of them. They invested first, their first investment was $425 million worth of Bitcoins. Now they have I think over 3 billion in Bitcoin. So okay, it's a public company, huge. There are I think over 40,000 public companies, and they have 80 trillions in assets. Which if they only choose to put 10% of that, that will be huge growth for Bitcoin. But also I want to say who are actually the shareholders of MicroStrategy are the biggest BlackRock, which is the largest investment fund, and Vanguard, which is for they own over 25% of MicroStrategy. So actually what I want to say here is a new stage where actually corporations are moving into Bitcoin because they realized, I hope more of them will realize what Bitcoin does for a corporation. So here is actually a big opportunity for Romania. Our company from Romania, which have money in their banks, sitting for long term, they can move part of that money in Bitcoin. Because Bitcoin will go up in time, go up in value in time, and not only will save that money, like the real power, the purchasing power, it actually will increase because I think for the next 10 years, Bitcoin still will be in an acceleration growth.
10 years.
Yeah, the next 10 years.
So we have to speed up. We have to.
So the last 10 years was the best asset to invest to. Yes.
Yeah. So we were in the what I always call the disappointment phase. So everyone was talking about, not necessarily sure about the value. I think we are now at the tipping point. So if you look at the exponential curve, and of course, let's say digital technology comes into place, but this will continue to grow at exponential rate. I'm pretty sure, especially because it's a scarce asset.
Yes.
And the scarcity, and the economy is all about distributing a scarcity. That's the economy. So the role of the economy is to distribute fairly a scarce asset. That's where I think Bitcoin comes into play and becomes a potential very important, let's say, mechanism for the digital economy. But I also think that if we just do one step back and we look at the wider implications, my biggest fear would be that actually corporations are stepping into Bitcoin without actually understanding Bitcoin. I've worked in technology for the past 6 years, not only in cryptocurrency, that's only just part one. The majority of the companies just jump on the bandwagon because it's hot. It's a shiny bits and pieces out there, everyone needs a piece of that. I think there's a big role for companies like Bitcoin Romania to actually explain and just do one step back, take a little bit of time, what's the actual opportunity. I think if you look at Romania, what Michael mentioned, if you can actually tokenize assets within the corporations and basically, it's basically building on a longer term trend where crowdsourcing and crowdfunding is basically the same principle. We are decentralizing the ownership of assets. Mm-hmm. And we want to basically, and that's I think why it's interesting to have this discussion also what Michael explained. What's the real problem that we're trying to solve it? I think that ultimately cryptocurrencies and blockchain was invented to democratize power. That's why I think why is China investing heavily in their own cryptocurrency? Because they see a potential big threat by Bitcoin in democratizing access from individuals to currency. And they are, I would say, in generally speaking, that's my personal opinion, they are, let's say, looking to basically have more and more control compared to Europe. But the biggest problem is that we are trying to democratize access in general, and cryptocurrencies are just one of the mechanisms. We have seen it with social media, that where digital technology basically was the alternative channel to standard communication during the Arab Spring. It's the same kind of principle. So we have to look beyond what we call the shiny bits and pieces, look beyond the noise. What's really happening? What's the potential? And that's why in the introduction I mentioned looking about the technology. And I think the big potential for corporations here in Romania is actually to tokenize parts of their assets in an alternative economy.
But understanding where are they entering.
But they have to definitely understand what they are entering and how to work this. In addition to Bitcoin specifically, I'm talking generally about tokenization and blockchain technology. But with that, and if you look at the wider picture, it becomes much more easy also to invest in Bitcoin as an alternative currency or digital currency to their traditional way, because in that case, you are basically working the digital economy. I think the ultimate game is that we have to some extent, incentivize commercial uptake of cryptocurrencies, specifically Bitcoin, because they are the first one and also the biggest one and the most accepted one. There are so many different versions out there, but if we can actually take this to a level where it becomes such an important part of our economy that you cannot deal without actually considering cryptocurrencies, that's where actually the opportunity really starts to emerge and flourish for everyone, not only the ones that actually can afford or are now able to step into this opportunity.
Well, actually in Romania, we have actually ATMs of Bitcoin.
Yes, yeah.
And as far as I know,
yeah,
we are the country in Europe with more ATMs.
We were the first one from Europe to have a Bitcoin ATM. It was back in 2014.
So you're telling me that I go with my fiat currency, my euros,
yes,
to an ATM,
yes,
and I can buy?
Yeah, yes, that's correct. Yes.
In an ATM, normal ATM in the street?
Yes, normal, okay, not a bank ATMs, but looks kind of similar.
Yeah, what we understand as one of ATM machines,
yes,
type of.
Yeah. This is part of the infrastructure, which is developing all over the world. I think globally now are close to 15,000 ATMs, Bitcoin crypto ATMs. So this is the fastest way.
How many we have?
15,000.
No, in Romania.
In Romania, close to 100.
Okay.
Yeah.
It's a nice number.
Yes, it's a big number, and we intend this year to have over 300 in Romania, so to add another 200. Because it's part of the infrastructure, and that's the fastest way to get into crypto or get out of the crypto. Mostly the customer, the same reason why they go to the ATM bank. If you need fast cash to go to a restaurant or to sell it at that moment, the ATMs do that job. And here we actually have an opportunity for companies in Romania, or yes, for companies to take a franchise of an ATM.
So you're franchising?
Yes, we franchise this model. It's a very lucrative. It's an ATM, so it doesn't need employees, like full-time employees.
Okay.
And it's also profitable. We have right now 20 partners.
But it's profitable for you or for me?
For both.
For both.
For both. Okay,
For both.
that's important.
Yes. And that's because crypto is a voluntary system. So nobody forces somebody to buy Bitcoins. They do because it's a good, they do services for people. Like the wheel, like any technology invented. And it's growing a lot. It's a big community, which is, global community. So this is why.
So if I want to franchise, if
yes.
I want to have an ATM, I don't know, in my company, in my lobby, in the lobby of my company.
So the best practices are to be easy to park close by. So a mall, for example, if it's located in a mall or in a gas station. Also, you have an extended hours of work, because sometimes it's better to drive. I mean, it's better to drive in the evening. It's less traffic, and to be inside. All of our ATMs are inside, like a mall or a gas station or hotel, for example. We have partners like that. That will be the best location to put an ATM. This can be if you have already a business, so it can be like a passive income. Or can be a full income also. Yes, you can take more than one franchise, for example. And
Sounds good.
As a profit, you can make between 1,000 and 5,000 profit on one ATM.
Per year?
Per month.
Per month?
Yes.
Okay, something to consider. Veronica, I have a lot of questions, but I would like to give some time also to the audience if they have any questions. Do we have any question, Veronica, from the audience that you would like to?
We have a question about the ATMs, the topic that you were discussing just now. Namely, how do you explain how they work and everything about them to regular people in smaller cities?
I don't know, because
do people-
we are hearing this echo, and maybe somebody can help us.
I suggest we just go on with the questions that we already have, and we will address questions from the audience towards the end of the webinar.
I think it's maybe from the mic of, okay, it's coming back. But basically, if I understood correctly, they were asking for you to explain how it works in a small town, a small city.
Yes. So the crypto.
The ATM.
The ATM.
Yes, please.
The ATM is actually it's better than the standard ATMs because it does both directions. So you can actually get money, get fiat currency from the ATM, or you can also put. Most of the current ATMs, they do both operations as well. In a small city, I guess there will be maybe less traffic, less customers. I would say like that, but it depends because this crypto is actually it's a global phenomenon, and but as I said,
sorry to interrupt you, Constantine. Sorry to interrupt. So basically, I have the ATM.
Yes.
And then, normally in a bank ATM, I come with my credit card.
Okay.
And then I receive my fiat currency, my euros, my lei. Here, if I'm introducing lei or euros, I'm not receiving
Yes.
Bitcoins.
No, you don't give it you don't receive it on a card. Yes, no, you actually have to have a wallet, right? You have to have a wallet which you can be on your phone. There are apps, like any apps,
Yeah.
and some of them are wallets. So you install one of these wallets, for example, for Bitcoin. You go with the phone, put the RON in the ATM, and the ATM can scan your wallet and send the Bitcoins to your wallet. So basically, you put the money into ATM, and the Bitcoin gets on your phone. Where is the wallet?
Okay.
And if you want to sell it, you do the vice versa. You have the Bitcoin on your phone, on your wallet from the phone, and send it to the ATM via the internet, and the ATM gives you the money.
So they will scan the QR code of the wallet or whatever.
Yes.
And then
They
you will
communicate.
select how much you want to.
Exactly. You choose, I want to sell 200 RON worth of Bitcoin, and the ATM will tell you exactly how much that will be in Bitcoin. And then the machine just talks.
So what's the purpose of this? Is the purpose to basically increase the easiness of people actually buying Bitcoin? Is that the majority?
Yes, yes.
Yeah, right?
Yeah, they are actually, is helping, definitely. There are people, which for me was a surprise, but I saw actually there are many people like that, which for them became real. Because before it was like this magic internet money, but the fact that they can actually go to an ATM and send the Bitcoins and get the traditional money, then become like, this is a real thing. So it helps to get more traction with people.
It's an important mechanism. You sort of say that with the internet. Before we had actually user interface, no one understood the internet. The moment we could actually have access to the internet through a browser, people suddenly understood, oh, this is what it works. I think it's a very important element to basically, let's say, make it easy. I think experience, but also, let's say, the easiness of use.
And democratization of.
Yeah, but it's like, also you see it with Uber as well. It's so easy to use. If the barrier to using of new emerging technology is not low enough, it will just take a while. And then the potential needs to be so big that people actually want to basically bridge the gap between being safe and securing what they know into something that is probably a little bit more unknown. And I think that's also one of the biggest, I would say, challenges for Bitcoin Romania or Bitcoin in general, which is also strikingly interesting, is that I meet a lot of people that don't trust cryptocurrencies, while the cryptocurrency actually, I think, is designed at first to create more trust in transactions. But I see a lot of people that say, I don't know, it's volatile, I don't know actually how it works. So they're actually afraid of something like this. So we need to basically bridge that barrier or the gap.
Probably is because of that. They don't know how it works.
No, and they don't know. I think that's the majority. So we need to basically educate people.
Because actually, as you were saying, the blockchain is bringing an extreme high level of security.
Exactly.
To these transactions.
Exactly, yes. I think because it's so big, fundamentally change how this Bitcoin works, like money, the value of it, the value it produces. The CEO of MicroStrategy, who just invested over 3 billion in 2013, he actually made it like public. He said on Twitter that he see like Bitcoin will disappear in a couple of months. So he was really like he didn't believe in this. But that's correct what you said. If people have to be educated and learn about it, then actually they understand that that's a big invention and that's the future and all the benefits comparing with what we have in the present.
I think also maybe to get back to what Michael was saying, and also I think it's interesting that all those, let's say, so there's all those regulations now coming into place around cryptocurrency. I think that ultimately we have to understand that if that happens, someone else will invent something else. Ultimately, I think there are always people trying to get away from more systematic control by public bodies and governments. So either when you want to regulate this, there's a accelerated movement of how digital technology disrupts more the traditional way of governing. I would rather see that public authorities would not just, let's say, try to accommodate for something in the similar way that they did with the regular economy, rather than say, okay, but what is actually new about it? What actually did change? And can we basically maybe develop protocols that are actually applicable to a digital economy, rather than just trying to push it back into the known systems that we've always known, like regulation. Someone had like the questions about, do I get my money back? No, because that might not be the intent of the whole system. So we might want to basically go into alternative protocols, alternative governance. I don't have the answer to that, but I think...
Well, probably it's also to create enough security protocols so that it will not happen, or it will not arrive the moment in which somebody will need to give you the money back, because the security is at a high level that basically in no insolvency will...
I'm not quite sure, maybe Constantine can elaborate a little bit on that. How is it actually possible that because I think of the past years I've seen many friends of mine that were so thrilled about the new cryptocurrency because the potential was so big, and then ultimately it didn't work, or it went up and then immediately down, or someone basically went away, like the recent example.
Dogecoin.
Yeah, so how does it work? So let's say, do we need some kind of a regulation on someone that actually wants to launch a cryptocurrency in order to protect the fraudulent kind of, let's say, thinking that potentially is inherently with something like it that is distributed on the blockchain?
Yeah.
I don't have the answer, but I'm curious to know from Custodian or Michael also as well.
Yeah, so I would say just this technology opened the door for many opportunities, and like I think Wild West, where let's say they discovered America or South America, there were a lot of opportunities and a lot of good actors and bad actors. So beside Bitcoin, there are other cryptocurrencies, and the second one, best known, is Ethereum, which is actually has a different role. It's more like this one opened the door for programmatic money, or so based on this Ethereum you can launch other coins or other projects. And there were situations back in 2017, and now it's happening again, where I think Uber, their first investment round was 200,000, and some of these crypto coins, their first round was 120 millions, 200 millions. I think it's just a lot of freedom, a lot of flexibility, but of course, when all of this money is happening in one day, putting in one coin, which you just have a white paper, of course, it's a lot of danger. So,
no, and especially there are so many cryptocurrencies nowadays. I read there is more than 2,000 or I don't know how many cryptocurrencies available.
More than 5, yes.
More than 5,000
yes.
cryptocurrencies. And then suddenly you see that the price of each one is 0.00, and suddenly Elon Musk, our friend, talk nicely about something and it goes up and then it goes down. And so, Constantine, one doubt that I have, again, from absolutely with no knowledge in the cryptocurrencies world, you're saying that there are corporations investing in cryptocurrencies, in Bitcoin especially.
In Bitcoin, yes.
Correct?
Yeah.
But you also said that the number of Bitcoins is limited.
Yes.
So
here is the opportunity actually.
But sorry, yes. Again, probably is not so relevant, but if there are, let me put 1,000 coins.
Yeah.
Okay. And you have them, how can I buy them? If you have them.
If you just pay me enough to convince me to give it to you.
No, okay, but how do you buy them in the market? Because if there is a limited number of coins.
Yeah. So there are actually 21, there will be 21 millions. Right now are like 18,700.
So there are still a number of coins that have
yes.
not been purchased by nobody.
Exactly.
Are there?
2 million and something.
But they are where?
They will, so this is a network of the strongest computer network. So their role is to also to mine this Bitcoin, to bring.
So they will be created.
Yes.
They will
every
be
10
mined.
minutes, they are created. Like right now, every 10 minutes, 6.3 Bitcoins are created.
Every 10 minutes,
yes,
6.3 Bitcoins are created and are entering into the game.
Exactly.
Yes. And when you will arrive to 21 million, 21 whatever, stops.
Exactly, that stops. This will be in 2140, so a little bit in the future.
Okay, we have time.
We have time for that. But before that is actually these new Bitcoins, they are getting less and less every 4 years. So in 2024, there will be actually 3 Bitcoins every 10 minutes.
Okay.
In 2019,
So they will become less available.
less new Bitcoins.
Yeah.
Yes.
That means this actually is a supply crisis, which is not nowhere is happening this. So for example, in gold, you have a price, and suddenly the price is going up of gold. There will be producers who will find a way to produce more.
Well, the gold is there.
It's everywhere, or can be everywhere. Sorry, we don't know where it is exactly.
Well, exactly.
Let's say
It's
it's
in the
south.
land, it's in the soil, but
Yeah.
we don't actually know where it is.
Or let's take oil. Oil has a price, and if it's going a lot up, Saudi Arabia, Russia, Iran,
They
or
stop
whatever,
producing, they stop
can
digging.
pump more because they are incentivized for that.
Yeah.
This will never happen with Bitcoin. So if the price will continue to go up, they will have to pay more in order to buy the Bitcoins because the production of Bitcoin is programmed.
It's
and
limited.
It's limited. So right now are 6. Starting to 2024 will be 3. And until they reach 21 millions, and that's it. So if you want to buy, you have to pay for it a good price. There are more than 50 millionaires, okay, and only 21 million Bitcoins. So there is not one Bitcoin for each millionaire. This is why there is this opportunity, but long term.
Good. But do you see ever that Bitcoin would be a regular payment solution like we see with the euro, etc.?
No, it's
never.
No, it has some also technical limitations, and I think now after 11, 12 years, we see the real the role of Bitcoin, which is hard asset to keep the value into it long term, and also to make big settlements. Like for example, was over 1 billion movement of value in Bitcoins and cost only $4. That one, but okay. So that was for you cannot do it cheaper for this amount with other systems. But to do like, for example, to buy coffees or do like small payments, Bitcoin is not for this.
It doesn't make sense because basically to buy a box of cigarettes, you might need 0.0000.
Exactly, yeah, that's one thing. And also the fee you pay for the miners is maybe $5 or more. So the coffee costs $2 and you pay the fee for the miners $5. It is not for that.
Yeah, but eventually there will be some products that the seller will accept Bitcoins. Yes. It will be your decision whether to spend a coin in buying a house or in buying a car, because maybe, as you said with the pizza, that car will eventually cost you a fortune.
Yes.
But there are some...
there are other coins which are good for this, which cost you less to pay, they are faster. There are a Romanian project in this direction, which is 𝗥𝗢𝗡𝗦𝗧𝗔𝗥𝗡𝗦, the name of it, based out of...
and it's in 200 something now? Or?
Yeah, the entire project is evaluated of over 3 billion. So there are other areas...
Some more millionaires there.
For sure.
Oh, nice, nice. Veronica, let's try again. Can you hear us well?
Yes, sorry. Can you hear me all right now?
Perfect. Thank you.
Okay. So we have another question. If and up to what extent are cryptocurrencies a threat for central banks to steer monetary policy as they lose control over continuously increasing amounts of money without central authority?
So, did you get the question? Let's repeat it again, Veronica.
So are cryptocurrencies a threat to central banks, and if so, to what extent? A threat
to central banks, okay, and
meaning to steer monetary policy of the central banks. because they would lose control over continuously increasing amounts of money without central authority. That's the premise.
From my point of view, I would never see it as a threat. I would always start with the opportunity part. I think that, let's say, that's what I said just previously. You have to adapt. So I would say that, like constantly, I think there will always be parallel, let's say, it will be one economy where there are alternatives. And I think digital technology enables us to have this alternative. I would say, what's the opportunity for central bank to basically still fulfill its role if it has a clear, let's say, monetary value in the economy? So they basically have to adapt. The traditional, I think, response from more regulatory authorities is to always say no, instead of let's turn it around. How can we accommodate this in order to make sure that people actually benefit from it? If we see this as a democratization opportunity for people, and so we are in a, I would say, very, let's say, comfortable place here in Romania or in the EU. But if you look at areas where people don't have access to banks or to regular money, how can these kind of developments, I'm not specifically talking about Bitcoin, but in general speaking, help basically people create provide them access to capacity to do something else that they couldn't do before, or to, let's say, trading, like the 𝗥𝗢𝗧𝗔𝗥𝗡𝗦𝗧𝗔𝗥𝗡 example that I used in the beginning. So if they consider it a threat, they will also act as a threat, and fear is never a good one.
Sorry to interrupt you, but they are actually acting, because as of 2024, Michael told us before, European Union is going to introduce a regulatory frame for that. So basically, they see the cryptocurrency as a threat.
Well, I'm not quite sure. I'm curious to learn from Michael whether actually this is done because they see it as a threat or because they see an opportunity for Europe. If you have a unified one single market for cryptocurrencies to actually position Europe in a different way. I'm not an expert in that field, but I can imagine that if you look at the general geopolitical, let's say, differences in the digital economy, you see that Europe definitely lags behind. So we have, especially, I take another example, platforms, and so the Amazons from this world, the Facebooks. We only have a few, and of course we have our big example, 𝗥𝗢𝗧𝗔𝗥𝗡 here in Romania, we have Spotify, we have a few in Europe. If you see that the average contribution of Europe in platform economy is like 4%, we definitely need to do something. So I can imagine that the effort done by the European Commission or the European Central Bank is just because of positioning Europe in a global economy that is just thriving on digital economy. But I would be curious to hear from Michael as well.
Michael, what is your opinion? Do you think central bank?
Sure. I mean, I think there are two things that play. One, there's MiCA, which effectively is the regulatory response, which is supposed to come in full force by 2024, and that's supposed to promote financial stability, protect consumers, and effectively ensure that we don't have the Wild West behavior of people taking second mortgages on their houses to invest into Bitcoin, right? It's supposed to ensure that we have common standards that replace 27 plus regimes with one pan-European regime. And the opportunities that go with that for existing crypto asset service providers, existing financial institutions, as well as those new to the market, as well as investors, institutional retail, is without limit. I mean, it's certainly where Europe is catching up a lot faster than other countries. The traditional benchmark, of course, for everything on European Union capital market or financial market integration is the United States. The United States has 50 plus different crypto asset regimes. It has also 50 plus different potential tax regimes. So on a state level, on a federal level, of course, it's more unified. So Europe is ahead. Central bank digital currency and responding directly to the question asked by, which is a great question, it's very simple. If a central bank allows a digital currency, a stable coin, to step in to the market without any regulation, and the prime example is always Facebook and the Libra project, it risks losing the sovereignty of who sets monetary policy. Okay, so what was Libra, now recast as Diem, but effectively you could take any other stablecoin. You could say a stablecoin is nothing else but saying, okay, I issue a token. It is linked one-to-one with a fiat currency. In this case, the United States dollar. Okay, the power of putting that currency, that stablecoin, in place for the 1.4 billion plus users of Facebook immediately means that you're creating an economy that is exceptionally valuable, vibrant, potentially goes to fulfill financial inclusion, serve those that are underbanked or unbanked, but it detracts economic growth from individual state revenues. It also detracts the ability for monetary policy transmission, what we were discussing earlier, of a central bank being able to step in and say, we will buy sovereign bonds, we will buy corporate bonds. Those monies that go to banks then have to, who are selling those bonds, have to go back into lending into the real economy. So you're taking the threat, if you want, from a central bank perspective, is very much you're losing the ability to finance the economy, and having a private, non-regulated institution, which is already, everyone uses Facebook or Facebook-related companies, be it WhatsApp, Instagram, or whatever. You're placing the control of the economy into a private corporation's hands. That's not democratically elected, that's not accountable, that is not independent in the way a central bank is. And from just to close off the concept and pick up of what we discussed a bit earlier, a central bank digital currency could very much well mean that every citizen who is a taxpayer can automatically have an account that is created at the central bank, backed by the full faith of a central bank. So it's insolvency, it's insolvency remote, even though, of course, sovereign countries become insolvent, as we see every couple of years with Argentina or Greece and other jurisdictions. The principle of having an account that is created there, and the ability to say, I will create now for every account holder 1,000 digital euro, right? Here you go. Here's a gift. That's monetary policy transmission in a much more direct fashion than saying we will buy 2 trillion euros worth of corporate bonds, 20 billion euros worth of corporate bonds every month over the next 18 to 24 months. So it's direct monetary policy transmission. And unless central banks step in and explore that opportunity, they risk losing the emerging battle with big tech firms who are also looking to create their own stable coins. What will probably happen is that we will have a coexistence between central bank digital currencies, where they make sense, stable coins issued by private companies that are regulated under new requirements, be it MiCA in the European Union, where stable coins are an essential part of the regulatory reform proposals, similar reform proposals in the United States or in other major jurisdictions. That will be the environment we live in. The flip side, I guess, to the argument is, what is the threat of a central bank digital currency itself? The threat is that you no longer have to have your deposits with a bank. And if you withdraw deposits from a bank in favor of keeping them with the central bank, you remove the bulk of liquidity that the bank has available to make loans. So that's why there's also reluctance from central banks to push ahead with central bank digital currencies because it risks threats to the financial system, and because you're effectively threatening the livelihood of a bank and the bank's importance in lending and financing projects and doing what a bank should be doing at its core and serving the clients and the communities that they engage with. And that is the current philosophical debate. I would very much think that in the next certainly 10 years, possibly even 5, we will be talking about having an account at your local bank. You may also have an account at a central bank. In many jurisdictions, it is possible for private institutions, certainly corporates, to have their direct accounts with the central bank. That is possible, not just financial institutions. But it's never really been the case that you as a private citizen have an account directly with the central bank. And that in its own right is potentially coming back full circle to what Martin is saying, the attractiveness of the democratization, sorry, difficult word, of all that blockchain has to offer and the evolving ecosystem of the financial space.
But Michael, is this threat of losing the control of the economy one of the reasons why governments like India or Turkey have banned the use of and the trade actually of cryptocurrencies in their countries?
Actually, I would say on the contrary. They lost the control of the economy through huge inflation. I don't know how much is now in Turkey, but it's more than 15%. So people, which of course they are the one who suffer the most, they look for alternatives because it's not their fault of the wrong policies. So yes, dictatorship governments, or the one who doesn't actually do the right thing for most of the people, they try to ban Bitcoin because it's the good alternative for the people and for the,
Can we see that happen in Europe? Do you think that eventually European Central Bank could ban the use of cryptocurrencies other than the one issued by them?
I would say no, because in order to understand Bitcoin better, we also have to study a little bit the history of money. Mm-hmm. Before fiat money, there was gold. These were the countries before trading as the countries and also the people. And that worked very well for many years. If a country wanted to do war campaign or investments, they had to pay with gold, and the gold was scarce. So if they either had the money or not. So there was no like overspending or wrong projects. So either was a good project and worth it to invest or not. Now when they switch, first was backed by gold. The first fiat currency was backed by gold, which was still like gold, but with more flexibility. Mm-hmm. But slowly they forgot about gold and it was just paper. So what's happening right now, okay, you can find quick solutions to problems and try to solve problems with more money, but that money becoming more is actually losing the real value. If you look at the dollar from 50 years ago, the purchasing power right now is just going down, down, down. I think here's the main difference. Where actually Bitcoin being limited, you just don't go on the wrong way. You either have it or not. So actually here I also want to outline the fact that being distributed, anyone can be in Bitcoin. Mm-hmm. And right now you see the corporations, and I think in somewhere in the future there will be national banks which will add Bitcoin to their reserves. Because okay, they have the fiat, which is not backed by gold, but they still have gold. The national banks, they still hold gold, a lot of gold.
The reserves.
Because these reserves, this is the real money. This is the real, the real reach of a country. And this is why even so they don't use it as a money anymore, but they buy gold. So I see in the future that actually the good governments, they will add Bitcoin to their reserves.
Yeah. Also, I think generally, if you look historically, the EU has always been quite progressive, not necessarily as fast, but always very progressive in adopting technology. So I worked in a long time in autonomous driving. They were always pro-automation rather than, let's say, the alternative in the US, but at the same time was an autonomous vehicle might kill someone, so we ban it. In Europe, it's not so, but the opportunity to save lives is bigger. So that mindset, I think, will not necessarily easily tend Europe to ban cryptocurrencies. I do think, also to the point of Michael, I think, but not necessarily to the point of Michael, that we need to, let's say, have a fundamental paradigm shift around how we govern these kind of things. Because ultimately there's not necessarily maybe a risk, but I live in Romania, I work across Europe. My taxation is a hell, because I now moved to Belgium. But if you look at the gig economy, why can't I live in Romania, work in the US, in Norway and in India, and still, let's say, earn money and let's say have that distributed and in a decent way? It's, let's say, it's a nightmare to, and I think that governments need to look beyond governing just by someone living in a country, paying taxes there, having a bank account in one country. I still actually now need to consider closing a bank account in Romania, opening one in Belgium. Why? Because I get, let's say, a lot of, let's say, additional fees from my Dutch bank whenever I do a payment here. That system doesn't work. And I think that cryptocurrencies might be a solution, but we have to basically embrace it rather than push it away. But we still then might, and then also listening to Michael, we have to have some decent compliance or, let's say, controls in place that basically helps us to basically grow and have people to adopt it in a decent fashion.
Mm-hmm. Well, we are arriving to the end of our time, but before giving...
I'm sorry, Javier?
Yes, I was going to ask you... you have more questions before giving the floor for the closing. Please, Veronica.
Yes, we have a question about the National Bank of Romania, namely how can its position be explained regarding the cryptocurrencies? Recently, the National Bank of Romania issued a press release, still ambiguous, and local banks are reluctant to work with companies involved in crypto deals.
Who wants to take this one?
I will take it because
Yeah.
so we are the local banks. They are prohibiting people to buy or sell crypto using the banking service. So, for example, if they send us money, or for example, we don't have banking services in Romania, Romanian bank, and that's
so
to explain is this. But
yeah, so basically, I have my wallet with Bitcoins.
Yes.
I want to transform them in fiat. Can I go to a bank? No.
No. You can come to us, send it to us, and we'll send it to your bank. But
okay.
Our bank is not based in Romania, because we cannot get banking services in Romania. We get in other European countries.
And how is the National Bank
accepting
that?
I don't know, just mentioned it actually in the last communique. It's mentioned that actually the banks should not should work with us and not banning us. Actually,
they are recommending the commercial banks to work with cryptocurrencies?
No, recommend, say just not to ban us.
Okay.
Yeah, you can say they say yeah, you can work with them.
Because are you regulated by the National Bank or
no?
Does the National Bank regulate in Romania the cryptocurrencies or the transaction in cryptocurrencies?
No, there is it's a 5 directive from European Union, which is will apply in Romania as well. But I think this issue here, which is actually it's an interesting issue because when I started back in 2013 in Canada, and this banning from the banks of people and companies which were dealing with crypto started first in North America, Canada and US. And so 2014, 2015, if you were doing this in there, they were closing your bank account with no explanations. In Romania, they didn't do that. I guess the wave didn't arrive here yet. Starting with 2017, actually late 2017, the banks in Romania, they started also ban the services to customers, like for us, us as an entity, as a company, and also public citizen. Right now, in the West, is happening the opposite, where the banks are working with cryptocurrencies. They are allowed to do transactions through their services. We have banks from 3 European countries, not Romania, from other 3 European countries. And so they allow. I think in Romania will maybe come after maybe this year or next year. It's just, I will not say bad intention, because actually they don't reach anything. It's just maybe they are not well informed, or I don't know.
Lack of regulation, maybe?
I mean, just on that point though, I mean, the National Bank of Romania is simply following the recommendations that have been put through by the European supervisory authorities. So the European Banking Authority, the European Securities and Markets Authority, and also European Insurance and Occupational Pensions Authority, that have set out multiple times either warnings directly on investors engaging in crypto assets, notably about volatility, the strength of white papers, the lack of transparency, risks of money laundering, and with the most recent push of final adoption of various anti-money laundering directives that are essential to how custodian wallet providers as well as crypto exchanges are regulated. The National Bank of Romania has published that statement. A number of other national competent authorities in other European Union member states have published similar measures. They're usually not very clear and leave the door open, but set the warning to say you traditional financial services firms can engage in crypto assets, but you need to be mindful of the risks, be it to the assets themselves, as well as the risks of money laundering and financial crime. And that's normal for that to be done. I wouldn't read too much into it, because it's something which is happening across all of Europe. The one thing which is pretty clear, and just going back to the point that Constantine is mentioning, we're very much past the point of risking and effectively people's accounts being closed without notice, because the European Union has put in measures to say you can't just overnight close accounts without cause. So that as well is something which is saving grace.
Yes, because actually, one of the things that I am told is like a Romanian bank will not allow you to transfer money from your own account to a cryptocurrency wallet or to a wallet to buy cryptocurrencies. They will not allow this type of transaction. But as Michael said, the directive is...
Yeah, to crypto exchange. Actually, from what I learned recently, they are more flexible. Some of the banks, not all of them. And my belief is that will change soon.
It will come, definitely it has to come. And as Michael was saying before, and Martin, regulation will help us to be able to deal with these cryptocurrencies in a more common and normal way, let's say. Veronica, do you have any other questions for the panelists?
Yes, we have one final question, and before I formulate it, I would like to remind of all our participants that if they want further details, they can always drop a line to info@nrcc.com, and we'll make sure we get you the answers that you seek. So coming back to the question, why is it so sure that after it stops being produced, Bitcoin, namely in 2024, Bitcoin will remain a sought-after asset holder versus just being discarded?
I guess, Costantine, this is for you.
Yeah, no, so it will stop being produced in 2140, so in over 100 years from now. So it has nothing to do, Bitcoin has nothing to do with the value it creates right now, has nothing to do with its production. It's a good storage value. You can do settlements, but mainly is this: you can store your value long term, and is the best option you have available right now. So when they will stop being producing bitcoins, actually the value will increase even further because there will be no new Bitcoins. So it will be, that's it, 21 millions. But you still function correctly, if that's the question, because the miners are rewarded based on the transactions. So the miners right now are rewarded through two ways. One are the new Bitcoins and transactions. So after the new Bitcoins will end, will be the transaction which that will be enough to reward well the miners.
Thank you, Constantin. And before giving you back the floor, Veronica, I will ask from our panelists in 1 minute, in 2 minutes, no more because time is pressure. Investment opportunities, cryptocurrencies. In 2 minutes, your opinion. Is an opportunity there? Would you invest in cryptocurrencies? What do we have to look at when investing in cryptocurrencies? In 2 minutes, how would you close it?
Yeah, I would say if you don't have Bitcoin, I hope this is the moment when you change. And actually, I think I will say it was a success meeting if at least a few of you will decide to buy Bitcoin for the long term. Long term means 3-5 years. We are still early stage in this big phenomenon, global phenomenon, and there is a lot of growth ahead of us. But you have to have patience, so you have to think it long term. So one word, Bitcoin, long term.
Michael?
Yeah, I would echo that. I would echo that. I would certainly say there is a long-term opportunity for growth. The opportunity is not risk-free. So you need to do your homework. You need to invest in educating yourself or picking a right provider that spends the time to actually educate about the opportunities about holding crypto assets, not just cryptocurrencies, but crypto assets more generally, directly or via access products, be it funds, derivatives, options, futures, forwards, etc., or index trackers. The universe is growing exceptionally rapidly in how many traditional financial instruments reference cryptocurrencies and crypto assets more generally. That will continue. And of course, it's not a get-rich-quick scheme, so patience. And of course, pay taxes. So apologies to end with the taxes, but
Thank you, Michael. And Martin?
Yeah, so I can be very, very short. So I think that, like I said, so this has been going on for a long time. So it's a long-term shot. Second one, educate yourself. So know what you're dealing with. I think that's for every, let's say, emerging opportunity, you have to basically take some time to understand what you're actually dealing with. And then I think ultimately, like Michael said, there's a bigger opportunity. So actually from a corporate perspective, which is predominantly where I work, don't just jump on the bandwagon. Look beyond the noise and really understand where you can actually work this for your benefit and see the opportunity. I'm always up for the opportunity. So
great. And before finishing, I just want to finalize myself in a positive note. We have heard a lot about cryptocurrencies, but actually I would like to say, although I have to say it, Bitcoin Romania actually is already helping an NGOs thanks to cryptocurrencies. So you're supporting NGOs by these ATMs that we talk about. So you have given them ATMs during a period of time so that they can actually benefit to support them during this pandemic time. So actually Bitcoin is already helping people.
Yes, it's true. It's actually helping a lot of people. What we did was a pilot project with 2 NGOs where they actually took 2 ATMs, so franchises, without paying the fees as a regular franchisor, just to have extra revenues in these challenging times.
So Bitcoin is already helping NGOs and people in Romania, which is very good.
Yes, we facilitate it, but actually the entire community which are using these ATMs are helping the NGOs also.
Very good, very good. Well, Constantin, Michael, Martin, thank you very much for sharing this afternoon with us, with the Netherlands Romanian Chamber of Commerce. I hope to our audience, I hope that we were able to bring to you some clarity, some knowledge, some maybe ideas, opportunities in regards to cryptocurrencies. And if so, we are happy with that. As Veronica said, info@nrcc.com, and whichever questions you might
I'm
have.
sorry.
Punro, sorry. And Veronica, back to you. The floor is yours. Thank you very much.
Thank you. A big thank you to all our panelists. So Mr. 𝗥𝗢𝗡𝗦𝗧𝗔𝗥𝗡𝗦𝗧 from Bitcoin, Mr. Martin Ong from Deloitte, and Mr. 𝗥𝗢𝗡𝗦𝗧𝗔𝗥𝗡𝗦𝗧 from Dentons. And of course, thank you, Mr. 𝗥𝗢𝗧𝗔𝗥𝗡𝗦𝗧𝗔𝗥𝗡 from Epitours for kindly moderating this. And we are looking forward to welcoming you all back online for our future events. In the meantime, enjoy the day, and thank you for joining us today. Bye bye. Take care.
Good. Thank you, David.